2024 is no ordinary year. It is the year when nearly half of humanity, billions of people, step into voting booths, place their ballots, and decide the fate of nations. From the world's largest democracies to its smallest, the planet is holding its breath. But behind the banners, speeches, and promises lies a truth few discuss. Elections are not just about politics. They are about money. They shape economies, shake markets, and alter the lives of everyday people in ways we rarely see coming. For investors, workers, and families alike, every vote carries a hidden cost or a hidden opportunity. Elections are celebrated as moments of hope, yet they also bring uncertainty, manipulation, and sometimes disaster. Policies shift overnight, currencies rise and fall, and entire industries can vanish with the stroke of a pen. So what happens when the world's largest election year collides with a fragile global economy? This is the story of how democracy and economics dance together, sometimes in harmony, sometimes in chaos. The biggest election year in history. 2024 has been called the largest election year in human history, and with good reason. Nearly half of the world's population, billions of people, were either casting ballots or living under governments that faced critical elections. From the United States to India, from Europe to Africa, nations across the globe were entering ballot boxes, choosing leaders who will guide them through some of the most uncertain years in modern times. On the surface, this feels like a victory for democracy. The very idea that so many individuals have the right to decide who governs them is extraordinary, considering that only a century ago, vast parts of the world still lived under monarchies, empires, or authoritarian regimes. Each election, no matter how small, becomes another stitch in the global fabric of self-determination. But if you peel back the layer of celebration, you'll find a different story, one that is not about votes themselves, but about the powerful economic ripple effects that follow them. The truth is simple. Elections don't just choose leaders, they move markets. They influence tax systems, investment climates, trade deals, and even the flow of global capital. Investors pay close attention not only to who might win, but to the possibility that policies could change overnight. This means that in election years, uncertainty becomes a silent but powerful economic force. For example, when a government is up for re-election, businesses often freeze big projects. A factory expansion may be delayed, a new office may remain on paper, and hiring slows down. Why? Because no company wants to commit millions or billions into a project when tomorrow's government could rewrite the rules of the game. Workers sense this uncertainty too. Families save instead of spend, worried about what new tax codes or job markets may bring. This slowdown in everyday activity doesn't always make headlines, but it has very real impacts on growth, inflation, and employment. And yet, some elections matter more than others. A small country changing leadership may not shake the global economy, but elections in large economies, the United States, the European Union, or India, send ripples across continents. The stakes are even higher when the candidates offer radically different visions for the economy. Will trade barriers rise or fall? Will corporations face tighter regulations, or will they see tax breaks? These questions don't just affect the voters in one country. They influence global supply chains, commodity prices, and financial markets from New York to Shanghai. So while the headlines in 2024 were filled with images of people casting their ballots, the deeper story was about something quieter but equally powerful. The uncertainty those votes carried into boardrooms, factories, and households around the world. Democracy is often described as messy, and in economic terms, that mess can be measured in delayed investments, slower growth, and anxious markets. But understanding why elections have this effect is the first step in learning how to navigate it. Because if 2024 has shown us anything, it's that while the ballot box chooses leaders, it also reshapes economies, sometimes in ways the voters never see.
Uncertainty, the silent economic force. Every election brings with it a wave of excitement. debate and anticipation. But hidden beneath the noise of campaign rallies and the drama of political debates lies something far more subtle, yet immensely powerful: uncertainty. Unlike inflation, unemployment, or trade deficits, uncertainty can't be easily measured, yet its fingerprints are everywhere in the economy during an election year. Businesses, large and small, are often the first to feel its weight. Imagine a company planning to build a billion-dollar factory. The land has been chosen, the workers lined up, the contracts nearly ready. But then, the election looms. One candidate promises new taxes on corporations, stricter labor rules, and more oversight. The other vows to cut taxes, reduce regulation, and open the door to free market expansion. Which version of tomorrow should the company prepare for? The answer is unclear, so the project stalls. Money sits idle, workers wait, and innovation slows. Not because the business lacks resources, but because the future is unpredictable. This paralysis spreads across the economy. Small businesses may delay hiring, unsure of how healthcare costs or wage rules might change. Families may put off buying homes or cars, concerned about job security or interest rates. Investors may pull money from risky ventures, waiting for clarity before putting their capital back to work. Each of these decisions is small on its own, but when multiplied by millions, the effect is enormous. Growth slows, confidence dips, and the economy enters a strange pause, waiting for voters to decide. The impact grows even sharper when politics becomes deeply polarized. When two sides of an election promise radically different futures, uncertainty shifts into overdrive. It's not just about small tweaks to policy, it's about entirely different economic landscapes. One side may envision an economy driven by state intervention and protection for workers. The other may see a future shaped by deregulation, free trade, and corporate freedom. Until the ballots are counted, no one knows which path will prevail. This uncertainty doesn't stay locked within national borders. In a globalized economy, elections in one country ripple outward. A potential trade war in the United States can make farmers in South America nervous. A shift in European Union leadership can influence supply chains in Africa or Asia. And when nations as large as India or Indonesia hold elections, global markets often move in response, adjusting to the possibility of new trade rules, tariffs, or infrastructure policies. But uncertainty is not always a villain. Some argue it forces companies to become more adaptable, to prepare for multiple scenarios, and to build resilience against shocks. In that sense, it can act like stress testing for an economy. Still, too much uncertainty for too long can paralyze growth, and that's where the danger lies. Elections are celebrated as a festival of democracy, but for markets and economies, they are also a storm of unknowns. Leaders may promise clarity, but until results are in, the economy holds its breath. And when half the world heads to the polls in the same year, that breath becomes global.
Political tricks and economic games. Elections are not only about competing visions of the future, they are also about survival. For incumbent governments, those already in power, the months leading up to an election can feel like the final sprint of a marathon. And in that sprint, leaders often reach for shortcuts. The goal is simple: make the economy look strong enough to win votes, even if the long-term costs are severe. One of the oldest tricks is manipulating interest rates. In theory, central banks are meant to be independent, free from political influence. Their job is to keep inflation under control and maintain financial stability. But history shows us that politicians often pressure central banks to cut rates before elections. Lower interest rates mean cheaper loans, more spending, and faster growth, at least temporarily. But once the election is over, the hangover sets in. Inflation rises, debts swell, and the central bank is left to clean up the mess.
Richard Nixon's pressure on the Federal Reserve in the early 1970s is a classic case. It helped him win re-election, but it also sowed the seeds of stagflation, high inflation combined with weak growth that plagued the U.S. for years. Another common tactic is fiscal fireworks, cutting taxes or ramping up government spending right before voters head to the polls. On paper, these moves look like gifts. Workers keep more of their paycheck, infrastructure projects spring to life, and the government proudly announces new social programs. But the reality is often less generous. These promises are rarely funded by sustainable revenue. Instead, they rely on borrowing, adding to national debt that future generations must repay. What looks like prosperity is often little more than borrowed time. Developing economies in particular often fall victim to this cycle. In countries where institutions are weaker, leaders may greenlight flashy but poorly planned projects, new roads, stadiums, or subsidies, not because the nation needs them, but because they make for good campaign slogans. When the money runs dry, these projects crumble, leaving behind half-built skeletons and a mountain of debt. Turkey provides a modern example, a series of politically motivated interventions in monetary policy, firing central bank governors who raised interest rates, forcing artificial cuts, and flooding the economy with cheap credit led to runaway inflation and a collapse in currency value. For ordinary citizens, this meant soaring prices on food, fuel, and housing. The problem isn't just that these tricks distort the economy, it's that they erode trust. Citizens begin to see policy not as a tool for stability, but as a weapon for winning elections. Businesses lose confidence in long-term planning, unsure whether today's policies are grounded in sound economics or political theater. Investors retreat, wary of governments that value power over responsibility. Yet, despite the damage, these games remain tempting. For politicians facing the uncertainty of democracy, short-term boosts can mean the difference between victory and defeat. And so, the cycle repeats. Growth inflated before the vote, pain delivered after. Elections may be a cornerstone of democracy, but when politics and economics become too entangled, the ballot box can leave scars that last long after the banners are taken down.
When elections break economies, elections are supposed to be a renewal, a chance for citizens to decide the direction of their nation. But history shows us that, in some cases, elections can become the very trigger for economic collapse. When politics overwhelms policy, when winning matters more than governing, the consequences can be devastating. One of the clearest lessons comes from the United States in the late 1920s and early 1930s. Facing voter pressure to protect American jobs, leaders embraced protectionism, raising tariffs on imported goods. At first, the policy sounded patriotic and popular. Factories would be shielded, farmers would get higher prices, and foreign competition would be kept at bay. But the real result was catastrophic. Other countries retaliated with their own tariffs, global trade shrank, and the Great Depression deepened. What began as an election promise turned into one of the greatest economic disasters of the 20th century. Argentina provides another painful example. For decades, its elections have been marked by cycles of populist promises. Candidates often vow massive subsidies, wage hikes, or cheap credit to win over voters. These promises create short-lived booms, but leave behind massive deficits and inflation. Each new government inherits the wreckage of the last, and instead of breaking free, Argentina finds itself trapped in a loop of crisis. Voters go to the polls with hope, but too often the result is more instability. Turkey offers a modern case study in how elections can spiral into economic chaos. Leaders, unwilling to risk voter anger, repeatedly interfered with central bank policy. Interest rates were slashed even as inflation soared, all to maintain the illusion of prosperity. The outcome was devastating. The currency collapsed, prices skyrocketed, and ordinary families found it harder to buy basic necessities like bread or fuel. For millions, the abstract idea of election-driven policy translated into very real hardship. Then there is the problem of the lame duck, leaders who know they are on their way out.
With no incentive to face voters again, some take reckless decisions, signing bloated contracts, handing out political favors, or ignoring long-term consequences. In young democracies, this can hollow out entire institutions, leaving the next government powerless to act. What makes these examples so dangerous is that the damage rarely stops at national borders. A debt crisis in Argentina shakes confidence in all emerging markets. U.S. tariffs in the 1930s didn't just harm Americans, they pulled the world into a depression. A currency collapse in Turkey ripples into Europe, where banks and investors are exposed. In our interconnected world, one nation's election-driven mistakes can trigger global waves. The lesson is sobering. Democracy is not automatically safe for economies. When elections become arenas for reckless promises or manipulative policies, the very system designed to give people power can end up eroding their prosperity. Winning votes may last for one night. Repairing an economy broken by politics can take decades.
The path forward: democracy and stability. Elections may create uncertainty, distortions, and even crises. But to stop the story here would be incomplete. Democracy, despite its flaws, remains the world's best hope for balancing power with progress. The challenge is not to avoid elections, but to strengthen the systems that protect economies from the storms they bring. Strong institutions are the first line of defense. Independent central banks, transparent budgets, and impartial courts act as stabilizers. They ensure that when politicians are tempted to bend the economy for votes, guardrails remain in place. For example, the European Central Bank operates above the direct influence of any single government. It may frustrate leaders at times, but its independence has given the Eurozone stability even through turbulent elections. Similarly, countries with credible watchdog agencies and balanced fiscal rules often weather election years with less volatility. Another shield is the maturity of the electorate itself. Informed voters can see through short-term bribes disguised as policy. They understand that a sudden tax cut or subsidy boom just before an election is often too good to be true. When citizens demand accountability, politicians are forced to think beyond the next vote. Education, free media, and civic engagement are therefore not just social goods, they are economic stabilizers. Global cooperation also plays a vital role. In today's interconnected world, no economy is an island. International institutions like the IMF, World Bank, and regional alliances can provide support when elections trigger instability. Bailouts, trade agreements, and coordinated policies act as safety nets, preventing national crises from spiraling into global catastrophes. These tools are not perfect, but without them, the damage from election-driven shocks would be far greater. Still, uncertainty will never disappear from democracy, and perhaps that is its hidden strength. The very unpredictability of elections forces economies to adapt. Businesses learn to diversify, investors spread their risks, and governments are reminded that power is temporary. This cycle of uncertainty and renewal keeps societies flexible, capable of reinventing themselves when needed. Autocracies may offer stability on the surface, but history shows that when they break, they shatter violently. Democracies, by contrast, bend without collapsing. The future will test this resilience. As the world faces climate change, technological disruption, and shifting geopolitical power, elections will decide not only who leads, but how humanity responds. The stakes are enormous, and so are the risks of short-term politics. But if citizens, institutions, and leaders embrace responsibility alongside freedom, democracy can guide economies through even the toughest storms. In the end, the ballot box is more than a tool of politics. It is a mirror of society, reflecting both our hopes and our fears. Yes, elections bring uncertainty, but they also bring possibility.
They are a reminder that economies are not just numbers on a spreadsheet. They are the lives, dreams, and choices of millions of people. And in giving those people a voice, democracy remains the most powerful engine of progress the world has ever known.